information contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show.
All right. And welcome back as we come into a Wednesday trading day. And let's take a look quickly at where we are with E-minis currently up 1375 with the NASDAQ futures up 52. We're coming into the day kind of similar to where we kind of were yesterday with major indices up a little. Is that where we were yesterday? Let me refresh my memory here. Actually, I think we were negative yesterday and then turned positive. Let's take a look. They all roll into one, don't they? Let's see. So yesterday we were, I got Monday confused yesterday. Yesterday we were up and we continued to rally after that as we look at the charts behind me here. And, you know, yesterday was kind of the second day where we had, during the day, the Vix Term Structure went into contango, but we weren't unable to close in contango. Currently, I'm showing the front month future 33.40 and the second month future 33.37. So very flat, but still not in contango currently. And I know I kind of hype this whole contango thing, but it's just a marking point to the fact that the VIX has moved lower as the market kind of rallies back here. If we back up and take a look at the bigger picture, which is, as you know, important to do, we're going to see that if we back to like 180-day chart, this is kind of the story here, is that we're well off the lows. We had a little down move here of a couple days down move, and now we're kind of continuing back sort of upward. So this upward movement remains intact here for us. And one thing that I've been watching, and it's kind of changed over the last hour or so, but look at this. This oil has really come back. Well over $20 a barrel. It's actually down $1.50 right now. Let's check out the action in the last hour or so, because I don't think I remembered it being. Yeah, it's not. It's down just. Hold on. It's down $1.50 so far today, but it really has had a pretty big rally recently. We reached a high last night of over $26 a barrel for oil. And as I'm kind of slowly scrolling across here to see the price action so far today, there we go. You can see it's really sold off since 7 o'clock this morning. It was up around 25.40, now down to 23. So oil volatile as we approach the open this morning. And if we look at the various oil ETPs, we can see UCO trying to get back towards $20, currently $16.29, and USO post split trading a little just shy of $21. Let's go to major news headlines because it's really shocking to me the fact that people are on an individual level are avoiding the government's recommendations that you stay out of the public and stay out of big crowds. You know, to listeners out there who may be watching in the U.S., just caution you, don't be an idiot. Don't expose yourself to this virus. There's still a lot unknown about this virus. And I've seen interviews on TV with people saying, like, this is ridiculous. We've had to stay inside long enough. I'm an American. I'm going to fight this virus the way Americans do and go out there and expose myself to it. you know, you don't need to wait in line to get new Air Jordans with all this other public. I guess they had to close in Miami. They had to close a park because people were just like, no, I'm not doing it. I'm not wearing a mask. And so they gave like 2,000 verbal warnings to people about this park. And then everybody just ignored the police. They're like, we're not going to wear masks. And so they had to close it. You know, just on an individual level, protect yourself. For me, it's not even as much about me as it's about, you know, my parents. I do the shopping for my family, and I'm trying to isolate my parents, who obviously are more vulnerable than I am since they're older. And I suggest that other people do that too. You know, it's science here, and despite your feelings about it one way or another, protect yourself. Use science to your advantage, and don't be an idiot. There we go. All right, so I reported last time on this show how I got bad marks and my position went to negative $8,000. Well, just to prove that that was just marks, it did come back. It's currently showing the account at $11,400. I'd say that was kind of good marks, and I'd expect on the open for it to bounce back to maybe $10,000, something like that. The current positions I have are SVXY. I own 45 of the butterflies. It's the June 21 50 70 90 fly, so I have it on 45 by 90 by 45. Once again, I'm long the SVXY 50, 70, 90 fly. So if we look at SVXY, what we're looking for, and it's a little over 400 days till expiration on this one, I believe. Let's see if I pull up the chart. So 408 days till expiration out in June. So in the next 408 days, essentially I'm looking for this too. And here is the chart. SVXY, if we go to a year chart, okay, so it came down from 69. It got all the way down to 24. And basically, I'm looking in the next year and a half for it to just get back to where it was. And to break even here, I paid an average of 90 cents for each butterfly. To break even here, I just need this above 50.9, so above $51 in the next 400 days. So I think it should be fine, an easy thing to be profitable on. And certainly the most money you make is if this goes to 70 and sits there, which would be several multiples of the 90 cents I paid for it. But in the meantime, to have us go back in contango would work for this position. Okay, the other position I have on is VXX. Here's the chart of VXX here. Now I bought in September the 38.34 put spread. So buying the 38 put and selling the 34 put. Right now it's 38.67. We saw it pop back up towards 42 this week, and I added a little bit. Here you can see the price action here. We popped from 35 back to 43. Now we're back to 37 and looking to kind of take out that 35 and head lower here at some point. This position has a little bit more of a ticking clock. We have 135 days till expiration. And I like positions that have longer time till expiration. Here you can see the theme with these positions is these are long-term positions. So, we can have another spike in the market. We could even take out the lows, and these positions could still work because they're far out in time. And so there you have it. Now let's take a quick look at the Vix term structure because we've talked about that a lot. Will today be the day that we end up actually back in contango? And if we pull up the Vix term structure here, now contango is just a fancy way of saying that having that front month future be lower than the second month future. So when we look here, we can see both of these futures are the same exact price right now, $33.40. So all we're looking for to go into contango is for this front month future to close lower than the second month future. Now, that's not going to change the world in any huge way, but it will it does represent a change in tone for us. Instead of the VIX term structure sloping up, it starts to slope down. Now, we've seen the VIX bounce around a lot, and it seems pretty clear that we're going to need the VIX to actually break 30 and head lower to really start piling on the decay here. If we look at the VIX chart recently here, and I'm still trying to adjust my charts to be kind of a little bit smaller here. Let me make one more attempt here. That's a little bit better. We can see the VIX trending lower, and that's kind of the story right there. You can see it. You know, we had a little, you kind of had a little bounce off of the 30 level here and jumped back up. Now, I don't think that this is like a technical quote unquote bounce. It's just that's kind of, this is derived from the S&P, and the S&P sold off, and so the VIX went higher at that point. I don't think there's anything really holding this above 30. And in fact, if we keep seeing these days where like not much is going on and E-minis are up a little bit, then the VIX will continue lower. Let me pull up a chart of the SPX now for a second to make a point here. Now, we know that the VIX is based on the SPX, and it's essentially the price level and the SPX, right? So if we look at the SPX and we check option prices about a month out, that's going to be a very similar number to that of the VIX. So if we look, we have an expiration 30 days out, and we're showing volatility of around 32. Now, if we pull up a chart of the SPX, and then I pick the study, if we kind of give ourselves a little bit of room here, and if I go to studies, add study, and I pick a it's not showing what I'm picking because it's on the other screen here, but I'm picking a volatility. I'm picking historical volatility study here. Okay, so this is going to show the actual realized volatility. So the number we get for the VIX and the number I just showed you, that is the options prices. That's what the options are pricing in volatility to be, how much we're priced in to move. The actual movement is down here, and we can see it's coming in at a 22. So as long as the actual movement is staying lower, in general, with options pricing, the actual movement is going to typically be slightly lower than the price level, and that's just due to the fact that there aren't as many people that want to sell options as buy them. There are some restrictions to selling options. It takes buying power, et cetera, et cetera. But when you see a big spread between the realized volatility, how much stuff is actually moving around, and the price level of the options, when there's a big spread, the price level is going to start moving towards what's actually happening. So thus, when we've got a 22 down here, if everything kind of stays the same, expect the SPX price level to move down from 32 down towards 22. And if we look back in time, we can see some of these readings here before this whole crisis, 6, 4, 6, this sort of thing. But if this just stays at 22, we don't need the markets to rally any further or anything. As long as this price level stays below the option price level, the VIX will continue to move lower. And, if we got a VIX of 22, that would certainly put us in contango and certainly work for all of these short positions here. So there you kind of have it from what I see right here. I'm going to say hi to everybody in chat. Hello. Things have been a bit quiet out there in my stats land for my videos. Let me show you here. Let me see if I can pull some of this up here. So, right at the beginning of the crisis, everybody was very intent on looking at videos and stuff. And I think, not surprisingly, now everybody's like, oh, I don't want to trade the market. Either a lot of retail people don't have any more money, or they just, they don't want to deal with it. But at least my stats, let's see, it appears to be pretty much down. Look at this, like views down views down 58%. Watch time down 65%, revenue down 41%. Now, obviously, there's not a lot of revenue associated with this channel, but just as kind of like a metric, things down, definitely. But you know, when you're a YouTuber, you don't do it based on how many people are watching you. You do it based on your love of the craft, and so there you go. So what do we have to look forward to here? Well, let's take another look at market headlines. I'm going to go to Drudge Report here and see what. Now, the president has closed down the task force significantly, and I guess he went to go visit Honeywell yesterday and has actually hit the road. I'm not sure how long he's going to stay on the road. Let's see how this reopening affects people. There's obviously tons of different news stories all around the country. Where I am in Massachusetts, we are still kind of on hold, and I did go to the supermarket yesterday, and people were acknowledging the masks and this sort of thing. Let's see. Javi, do you buy put spread? Do you always buy VXX put spreads? In what situation would you sell premium? Well, when you ask that, it brings to mind a point which I like to make, which is basically like that when you're trading a put spread, when you're buying a put spread, it's the same exact thing as selling a call spread. It just depends on which strike you are closest to. So let me just challenge you, Javi. If I had come on this morning and said, well, I am currently short the VXX call spread, what would you have said? If I had said, I always sell VXX call spreads, and I showed you the call spread, which is the same exact thing as the put spread. So for example here, the SEP 3438 put spread, I could have said that I sold the SEP 3438 call spread, and it would be the exact same thing, and it would sound like I was selling premium. But the reality is that whichever strike we are currently closest to is going to define the spread. So when you buy a put spread, you're buying one option and selling another, and it costs you the same as if you're selling a call spread, because when you sell a call spread, you have to put money up to guarantee that spread. So I don't actually sell naked calls generally. I usually have some sort of hedge position. I do sometimes sell call spreads, but I don't really think of a put spread as a premium type situation because I'm buying one option and selling another. So it's not it's a question of risk and reward more than thinking of it as buying or selling premium. If I was straight up buying puts, I would get your point. But since it's a spread, it's more of a nuanced type trade, in my opinion. All right, so there we have it. We will see today if we end up in contango or not. We're very close to it here. Actually, I'm showing right now we're in contango by 5 cents. It's very exciting. Best of luck to trading to all of you today. And there's a small possibility I might actually come on later today. So stay tuned and leave any questions in the comments below. And I will see you shortly. Thanks for watching. Is the risk the same? Yeah, the risk is the same selling a call spread versus buying a put spread. The only difference is you just want to look at that option that you're selling. If you're dealing with a stock that has some sort of special dividend or dividend risk, then there might be a slight difference, but in general, it's all the same. They're two sides of the same coin, buying a put spread or selling a call spread. So for example, if you have $5 between the strikes, if you're buying a put spread paying $3, you are actually doing the same thing as selling the exact same call spread at $2. So people get really hung up on this stuff like, well, I'm buying a put spread, I'm paying premium versus selling the call spread, when it's actually the same thing. But you do certainly want to look at your Greeks. If you're dealing with a spread that's like not near at the money, so for example, VXX is 37. If we're talking about like a way out of the money put spread, like I'm buying the 2025 put spread somewhere, then that is going to be affected certainly by volatility coming in and out. But if you're dealing with spreads that are anywhere close to being at the money, then buying put spread versus selling call spread, it really depends on which strike you're hanging out at. If the underlying is closer to the strike you're short, then you're going to be collecting a little bit of money every day. If the underlying stays closer to the strike you're long, then it's going to cost you every day. The initial credit that you have to pay or accept is offset by whatever money you need to put up for margin. So don't get too hung up on that particular aspect of buying or selling premium. These trades are really, they're directional delta trades, and the reason you're buying one option and selling another is to offset any of that that theta risk. Cool. All right. Thanks for your question. I appreciate it, and I'll see you next time.